Thanks so much for joining us today. I'm Marlon Boulding with you, your tour guide to the ag commodities. Well, here it is, Monday, ready to kick off the final full trading week of the month of May. Now, keep in mind, next weekend is going to be a long holiday weekend because Memorial Day will be that following Monday. So this could be an interesting week as we get toward the end of the month. And we had, of course, big market gyrations last week as well. And it'll be interesting to see just how much planning progress we have made when we get the new USDA report out this afternoon. Well, we're going to bring in Brian Hoops, and he is the president of Midwest Market Solutions. And Brian, we had some new information just off the wire a moment ago from USDA. We had an overnight, in this case, over the weekend, export sale. And it was a sale of soybeans. A little odd, though. It was a sale of 130,000 tons, and of all places, Egypt. That's not something you see every day. 2 boatloads of soybeans to Egypt. Didn't even know they bought soybeans from us. Is that something fairly new?
Yeah, good morning, Marlon. Hope you had a good weekend. It is kind of surprising. You know, if we talk Egypt, we're usually talking about maybe them buying wheat from us, maybe some bean oil, but now they're into buying soybeans as well. So it's for the old crop marketing year, and that just takes more supplies off of the ending stocks numbers, and they're already getting tight, and this will tighten it up even further if this sale goes through. So yeah, it's a friendly number for old crop soybeans. July contract rallied strongly last week, and looks like they're going to start off the week with another sale and some more positive news. So grain markets all firming up overnight after some lower prices for the most part last week, except for July soybeans. Wheat market really starting to rebound here. There was a lot of talk late last week that the NATO would kind of pressure Russia into allowing some export business from the Ukraine to flow out of the country and help the world supply of wheat. And Russia put the brakes on that over the weekend. And that's why we're seeing some strength in this wheat market to begin the week.
Well, that we are. How far have we fallen, though, in the wheat trade? I mean, this seems to be just a bit of a meager bounce, if that would be the case.
Yeah, so far very meager compared to what we lost last week, especially that hard red spring wheat contract, fell 50 cents on Friday alone. A lot of it was blamed on some profit taking and long liquidation as markets had become extremely overbought, and we relieved some of that with a big drop Thursday, Friday of last week, and seeing a little bit of a recovery here today. The Kansas City wheat fell right to some long-term support that we expected would hold, so it's bouncing in the right spot. The key will be is can we follow through during today's session and into the rest of the week. Now, there's a lot of rain in the forecast for hard red wheat states of Kansas, Oklahoma, maybe some Texas, Missouri. The question will be is it going to come too late to really help that crop out, or can there be a benefit to it? But I would expect maybe some unwinding of spreads with Chicago gaining against Kansas City this week because of the opportunity possibly to export some wheat, and with these rains moving through that hard red wheat belt where it's been the driest.
Yeah, and it's not going to create any more berries at this point. It's just too late in the growing season. If anything, it would just help the ones that are there fill out maybe a little more. Let's take a look at the prices this morning then on the Globex market. Our quotes are provided by Bar Chart. On July corn, we ended up 3 3/4 higher at 782.5 this morning. And December was also higher. We had soybeans with July just 2 cents higher at 1707 1/4. And you had the new crop in November gaining 8 3/4 cents. Now, on the wheat that you were talking about, July Chicago wheat 20 1/4 higher at 11.89 per bushel. Kansas City, you had July up 14 1/4 at 12.67. It's got a ways to go, though, to gain back very much of what it lost last week. Spring wheat, you had July up 13 1/4 at 12.92 1/4. We'll come back in a moment and take a look at the latest information related to our livestock trade after this. Well, last Friday, after we closed up the markets for the week, USDA released their monthly cattle on feed numbers. And there's been a fair amount of talk about these numbers after they came out. The on-feed number as of May the 1st came in 2% higher than what we had a year ago. Average trade guess, 101.5. So, pretty close, a little bit high there. Placement number in April, 99% of a year ago. The average trade guess, 96.5%. So a little high there, about 2.5% over the average trade guess. The marketings in April, just very, very close to what the trade estimate was. It came in at 98%, just about a tenth of a point from where the trade thought it would be. So all in all, do you consider this to be an overly bearish report here, Brian, just because of the market action we had going into it?
Yeah, the report was a little bit negative compared to the expectations, especially for the placements. They came in well above expectations and should, in theory, pressure October, December, maybe February cattle. But we did have a lot of weakness going into the report in those contract months. The on-feed number is the largest since 1996 for this time of year. But the good news is we are killing a lot of cattle, so we're certainly not backing them up. Last week's kill was 680,000 head. The industry expects another big kill this week, over 670,000 head. And so when we talk about killing that many cattle, we're not going to see packers really drop the cash bids. They're going to need to, especially in the last week here of the month, bid up for some of the supplies. So I would expect, you might see a little weakness right out of the start in reaction to this, but I do think you'll find some firmness and maybe even a rally 1 or 2 days this week as we go into the end of the month, with packers needing that inventory to complete this large kill that they're planning for this week.
Well, one thing that might be supportive, let's take a look at the Dow. A lot of interest in what the equity markets do, and it is higher today. June Dow Industrial Average Futures now up 333 points this morning at 31,546. Sometimes that can be helpful. On the U.S. dollar index, by the way, it is down fairly hard today, down 833 points on the June futures at 102.340. Some would say that would be helpful especially for the grain trade. And then you had the crude oil trade, the West Texas crude with July down 32 cents at 109.96. Well, when we headed into that report on Friday, live cattle, we had the June up 7 cents. August down 47, though. All the deferreds were a little lower. And the feeders wrapped up last week with the August down $1.27 at 163.92. That'll be our starting point today. And on the lean hog market, you had June up 357, July up 202. We'll see if they can follow through today. Well, Brian, thank you for talking with us this morning to kick off the week. You have a good day. Brian Hoops of Midwest Market Solutions. Janet, back to you.